Hey everyone, welcome. It is Michael here with Offshore Citizen. We are once again hanging out with you in Bulgaria, and we are going to talk today about a subject that I've got a bunch of people make some requests around, which is the subject of investing. So obviously when we talk about doing things internationally, what are we talking about? We're talking about living abroad potentially. We're talking about doing business abroad. We're talking about potentially getting citizenships and residencies. We're talking about banking. We're talking about potentially hiring people, etc. And the thing that we can talk about as well is investing, right? So I want to give a little bit of an introduction into international investing today and talk specifically, first of all, about kind of the background, of course, why would anyone want to do this, and pros and cons, I guess, and then most important kind of things to worry about when you're paying attention to investing abroad. So I guess starting off with the background of why would you want to invest internationally, and it's simply because there's other opportunities, right? So when the market is down in one place, or when it's risky in one place, it might be up in another place or less risky in another place, right? So from that perspective, we have one clear reason why we would want to do that. It also helps you to diversify. So, if you're talking about all of your risks kind of being in one basket, all your volatility being in one basket, well, you can counterbalance that to some extent, okay? And it's worth noting that, Ed Bogle, who is a very, very famous investor, he's the founder of Vanguard, which is probably the most famous kind of mutual fund company, low fees, etc. So Warren Buffett will often recommend Ed Bogle's funds, kind of a Vanguard index of the S&P 500. He'll mention that, hey, look, when you're buying S&P 500 companies, you are investing in the global market, okay? So you're already globally diversified because the companies that you're investing in are globally diversified. Now, if you're buying bonds, say that won't be the case, right? Bonds, typically you're buying for a particular company, you're buying for a particular geography, a particular country, etc., right? So municipalities, provinces, states, federal governments, etc. So there isn't really international bonds in the same way. Yes, again, if you're investing in a Fortune 500 company, then yes, that company may, and you're buying their bonds, right? So say you're buying Microsoft bonds or something. That company, of course, has global presence, but you're not going to be able to capture the same benefits that come from this. Now, the other thing that we have talked a bunch about on our channel so far is about the subject of real estate, right? Real estate is super geographically specific. So you'll have people who don't understand real estate, and we'll do maybe a whole video on real estate at some point in time. But, somebody will say, oh, the Canadian real estate market. Well, there is no Canadian real estate market, right? There are things that are common across the markets within Canada, but real estate is very geographically specific. You could literally, for sure one city can be very different than another city within a country, but you can also get even one district or one different street or something like that can perform better. Not as much so at that point in time because there's kind of a ripple effect, but definitely this can take place, okay? So this is one key thing that we want to pay attention to is, yes, there are some advantages that we can get from investing in other parts of the world, and especially I would say, look, if the whole market has just crashed and there's lots of opportunities to buy, so say you're talking about like 2012 in the US housing market, the reason to go and invest in the housing market in a bunch of other places, if you're, say, American, are less. Why? Well, because of the fact that you've already got a ton of good deals, right? Say it's 2011, say it's 2011, I believe the housing market in the US broadly bottomed in 2012, but let's say it's 2011, cap rates are very good, prices are very low on a historic basis, you can see the market's recovering anyway, you have a legal system that you can look at that will protect you, and you understand, you have a financial market that makes it easy for you to get debt, etc. All these things work together to make it make sense. But on the flip side, right now it's 2020, I guess February, and we're sitting here, it's like, look, markets are at historic highs. Is there reason to believe that, potentially the stock market could go down? Yeah, there's lots of reasons to believe that, right? Is there reason to believe that, bonds are a poor investment? Well, look, bond rates are super low, right? It's just, bonds are a horrible place to be right now if we're talking about, say, US bonds as an example. So Might there be opportunities to find bonds in other markets that pay, say, 10%? Yeah, absolutely. You can buy some pretty solid corporate or bank bonds or something like that in some geographies, maybe even listed on, the London Stock Exchange or places like this. So, they're listed on major exchanges, but they have other advantages, right? So that kind of hopefully gives you a little bit of background on what's the deal with respect to why you would want to look at this, right? You would look at it for diversification, you would look at it for potential other opportunities, counter-cyclical opportunities, etc. Okay? What's next? Well, let's talk about some of the challenges. And, there's a broad spectrum here, right? You have anywhere from very developed markets like Canada, the US, Australia, various parts of Europe, etc., to, probably the most extreme is parts of Africa, right? I was looking at a deal last week. It was to do with a stone crushing business, right? And it's in Africa, well, in the Ivory Coast. You're like, okay, well, what's the problem with looking at those markets? The problem with looking at those markets is that you're in a situation where a lot of the things you might take for granted in, let's say, Canada or the US, or Australia or UK or Germany, you cannot rely on in those places. So I remember the first time that I ever looked at deals in Africa, it was, I believe, 2009, somewhere around that. And I went to a mentor of mine and I asked him about it, and he was just like, look, here's the deal. You can't rely on the fact that they actually have title to the land there. You can't rely on the fact that there's not going to be some sort of severe government corruption, let alone other corruption that's going to come in and mess you up. There are so many unknowns in that situation that it's extremely complicated to do business there, okay? Doesn't mean there isn't money to be made. There might be, right? That's what we would call frontier markets, right? So they're way out there, right? We're not talking about, we're going from developed to developing to frontier, right? And, emerging markets to frontier markets, really. So we've got this broad area. So, but it's worthwhile to know this, right? Because we're going to do some due diligence. So I'm looking at a deal right now in Hungary, right? What is Hungary? Okay, so Hungary is a situation where, is it as robust and refined as, again, let's say the US, right? No, the access to information is not as great. So I'll give you an example. Credit markets. There's sophisticated credit scoring that exists in a place like the US that does not exist in a lot of these other countries, okay? So you can evaluate risks based on those credit scores in a way that you can't in some other places, all right? What is the legal framework that's going to be in place to enforce if it turns out things go wrong? Now, it turns out that Hungary, again, it's a fairly developed market, so you don't have a ton of problems there. There might be some good opportunities. On the flip side, you have to realize it's a different legal system and you're dealing with Hungarian, right? That's going to make it more complicated. What are some other things we have to consider? And again, pros and cons. Well, if I do a deal in Hungary, I'm dealing with the Hungarian florin, right? It's their currency. So I'm exposed to currency risk. If my home currency is, let's say, euros or dollars or pounds or something like that, right? There's a possibility, it could go both ways for me, right? It could be, hey, look, my currency goes down relative to the florin, and so I get a boost in returns as a result. So a good example of this is, there's a very famous investor, Jim Rogers, who was partners with George Soros in Quantum Fund back in the day, and he is known to travel the world, and people would talk to him about, or talk of him like being the Indiana Jones of investing, okay? And so he, a few years ago, did a really interesting investment into Russia. He'd said for years he would never invest in Russia, but things had changed. So he invested in bonds in Russia. Now those bonds were high yield bonds. I think it was in Russian rubles, right? So on the one hand, it was like 9% yield, but at the same time, the ruble did very well. I think it was like 20% higher relative to the dollar or whatever the currency pair was. And so really, that meant that over that year period of time, you're talking about like approximately a 30% return in a year, right? Now that could have gone the other way, right? The currency could have crashed. Say you had bought into Malaysia in, I don't know when it was approximately that the Malaysian currency dropped, maybe let's say you were there in 2012, sometime around when the currency was high, and then the currency dropped dramatically, right? You could say the same thing in Turkey. The currency was quite high, and then it dropped. I was fortunate enough to go there on vacation when it was very low, and it was perfect. We got good deals. But imagine that you had invested in Turkish lira, right? And I don't mean that you would have bought Turkish lira. I mean, if you buy a house in Turkey, it's really denominated in Turkish lira. So if the Turkish lira goes down, generally speaking, your investment is going to go down, right? It was something similar if you looked at the Vancouver housing market in Vancouver, Canada. I don't remember what it was, a few years back. The market had gone way up, right? In terms of Canadian dollars. And so for Canadians, they're saying, oh, it's gotten so expensive. But really what had happened was the Canadian dollar had dropped a lot. And in real terms, on a global basis, if you're measuring, say, US dollars, it hadn't gone up that much. And part of what had happened was it had become very attractive for international investors, particularly the Chinese, to put money there because on a relative basis, comparing to San Francisco or LA or Seattle or someplace like that, it was a lot cheaper, right? So anytime you're investing globally, you have to be aware of currencies, okay? And so what's the basic advice here? The basic advice is if you're kind of looking for opportunities, look for places where the currency is low, right? So currencies tend to go in cycles. I mean, most things in investments tend to go in cycles. And so if, say, the US dollar is high, you don't know how long that will go on for. But, if you're comparing to US dollars, you say, okay, this guy's down. All right, it's not as likely to go down a lot more. So maybe, for example, a very good investor that I know bought into Turkey at like the optimal time when the currency had crashed and everything was going on. Everybody's saying, oh, don't go into Turkey. He's investing in Turkey and did very well, right? Similar thing in Vietnam, similar thing in potentially you could do Malaysia. I don't know exactly. Again, it's hard to say what the currency is going to do, but if something is weak, then the tendency is going to be that it's going to go up. Now, that trend can last a long time. If we look at Australia right now, the Aussie dollar just hit historic lows. A little while back, it was down a lot. Before, it's been down for a number of years because the mining sector has been down. And so you could say, okay, well, I would have expected that it would have continued down, but in practice, it actually didn't, right? It would have gone up relatively, but it's continued to go down. Now, I have some clients who they're busy buying Aussie dollars right now because they say, look, at $1.50, it's a steal. So I'm going to put a few million in there. And if it goes up by 5 or 10%, which is entirely possible over the next while, then I'm going to do well. So sometimes you can play with that, right? And it also creates business opportunities. Now, all of a sudden you can buy things for cheaper there and you can sell them to other markets. So there's differentials there. Okay, so that's currencies to pay attention to. The next thing is just in general markets. So we can look at something, for example, called cyclically adjusted price earnings ratio, which is a measure that's quite famous. It was put together by a very famous economist, and it measures the rolling 10-year price earnings ratio of the market. And Dr. Schiller, his name is Dr. Robert Schiller, and so you can look at, he keeps track of these by country, and you can see which ones are down, and you can buy them on a historic low, and that's a way of kind of getting some advantages, right? Similar thing with housing markets, right? You can pay attention to, okay, which markets are down, which markets are up. There's always an opportunity somewhere in the world, okay? Next, let's pay attention to legal systems. Legal systems can screw you up, right? And this can go in developed areas as well as undeveloped areas. I have a client who owns property in Netherlands, right? Well, the reality is that the landlord-tenant rules are not necessarily so favorable there. I've got people who bought property in Denver for Airbnb purposes, and now Denver's basically gone and brought rules in to kind of shut down Airbnb, right? So that's created its own set of issues, okay? So be aware of the legal challenges and understand that the legal challenges might be much more complicated to navigate in these other countries. Now, this could work in your favor as well, because if you're in a market like Germany, right, where the landlord-tenant rules are quite tenant-friendly, well, maybe you don't want to invest there and you can find some other place, like maybe Georgia, where the rules are much more friendly for landlords, and so that gives you an opportunity. Okay, so there's that. Next, let's pay attention to corruption, all right? Corruption is a big thing, and we can tie this into the legal, which I was mentioning before. It's easy to rely on in some countries, hey, look, I can do a title search to see if this person actually owns this property. Well, there were situations in Serbia a while back
where people were selling the same apartment multiple times, right? So it's a builder, they're building some apartment building, they're selling off units, and they end up selling that same unit to 3 or 4 people. Well, what are you going to do at that point in time? They've got your money, they've run off, it's going to be very difficult for you to enforce in the courts. You know, this is a problem for you. So you got to be very careful. That would be very, very difficult to have happen in, let's say, the US, right? Where everything is registered on title, you have a conveyancing system through lawyers, etc. This is all very important. Which, by the way, if we want to talk about Serbia, and there's been a few other markets where this has happened as well, where mortgages were denominated in Swiss francs, and it ended up causing a real problem for people, right? Basically what happened was the Swiss franc went way up, and as a result, the mortgage payment went way up. Big problem, right? You don't want to be in that situation. So be aware of that. It can work for you, it can work against you. You have to be very, very savvy. Next is, again, just kind of that when we're talking about the corruption, you know, when you give somebody money, how do you know it's actually going to go and get paid into what it is you're looking for? Are people, you know, what's the environment in terms of bribes, etc.? Can you rely on the banking system? I have clients who do a lot of business in Ukraine and will tell stories about how unreliable the banks are there. When you get money wired into the bank in Ukraine, you withdraw it that same day and go and, you know, use it to pay your staff, etc., because you don't know if it's going to be there the next day. This is concerning, right? This is a fundamental problem. So all of these things come together as important things that they can work for you or they can work against you. If you understand the environment, if you have local partners who are trusted, etc., that can, you know, make things very good for you, right? These clients I mentioned in Ukraine, they've done very well because of doing business in Ukraine, but it's also a bunch of challenges, right? I have a close friend who, he ran a business in Ukraine. He's Ukrainian by background, and he ran an air conditioning company. So they would basically buy air conditioning units in Turkey, ship them into Ukraine, and sell them to the Ukrainian market. Fairly simple, right? But every time they would get to the border, they'd be grilled for bribes, right? And they'd have to negotiate this whole process. It brings a lot of uncertainty into what you're doing. They would tell stories. This was back, you know, a number of years before the previous regime fell, but it was very much run by really the equivalent of a mob, right? And they said, if you showed up with a new BMW, somebody would write your license plate number down, and next day you'd get a visit and someone would say, oh, I see you're doing well, that's great, but you need to share. And, you know, that's not true in most environments. So you've got to be aware of these things, right? You've got to be aware of when you're going in there, what are the challenges, what are the risks, what are the things that are different than the country you're coming from? And if you can navigate that, great. But people will tell a lot of stories. There's lots of scammers out there. There's lots of this kind of thing. And you have to be sure to protect yourself. So anyway, I hope that helps to give you a basic introduction into how investing in these places works. Like I said, there's lots of good opportunities out there. There's lots of cases where you can, you know, pick up deals that 10 years from now could be worth a lot. There's lots of cases, you know, the famous stories are, of course, are places like Russia and Serbia, where when the government collapsed, you could buy companies for, you know, 1 cent on the dollar, and, you know, the company that you paid 10 million for is worth $1 billion, and off you go. You couldn't do that in the normal American market, as an example, right? But you can do it very well at the right point in time in some of these other places. So there's good opportunities if you can find them, but you also need to be aware of it. So I hope that helps. If you want help, if you're interested in a particular market, if you're interested in a particular asset class, etc., reach out to us. We're happy to connect you where we have. We have lots of people around the world who we work with, and you know, local professionals on the ground, as well as, you know, stuff that we're doing. So I hope that helps. We'll see you guys on the next video.